Hi. Hi, everyone. This talk is about the work that Rain is doing to power real-world spending with Avalanche through the Avalanche Card. So I'm the CTO and co-founder of Rain. Me and my co-founder, Farouk, we have traditional backgrounds in finance and fintech. I sold my last startup to Intuit, where I worked at QuickBooks for several years. And my co-founder, Farouk, was the CIO of an investment bank. But in 2021, we got red-pilled into crypto and stablecoins from the work we did working on a side project together. So in 2021, we started working on this project called signandwire.com. It was not crypto at all. It was built using traditional Rails. We were trying to make an easy investment platform for startups. But the frustration that we had in using the traditional legacy banking Rails, especially in the US with ACH and Wire, is kind of led us to where we are today. So, just even getting access to ACH Rails in the US is really expensive. It's very permissive. You have to convince a bank to work with you. And then once you're on ACH Rails, it takes multiple days for any money to move and settle in a bank account. So oftentimes, founders thought the money was lost. There's no tracing. So in 2021, we decided to add crypto as a rail in the platform. And then instantly, any investor anywhere in the world can invest in a startup any day, bank holidays, weekends, and the funds will get there in seconds for a fraction of the penny. And that's when we had the aha moment that stablecoins were going to be ubiquitous. This was a 100x better experience. How do we get there faster? And then we had the traditional problem that a lot of people find when they're dealing with digital assets is it's very easy to receive it, but then once you get it, you're very limited in what you can do with it. So ideally, you have your assets on chain, and then you can spend it everywhere that you want. But we all know that's really not the case. A typical flow for someone trying to do this would be you have your assets on chain, you transfer it to a centralized exchange. That's maybe a delay. There might be some fees associated with that. They might block you for doing certain things. And then once you're at that exchange, you change it to fiat. There might be a spread on that. There might be a delay. There might be limits. And then finally, you transfer it to a bank. There might also be delays. Your bank might block you for doing crypto stuff. But from your bank, then you can withdraw it in an ATM. You can use it to purchase something on a card. But all of this takes several days. You might get blocked multiple times. And at the end, you have less money than you started with. So pretty much not ideal. And what we've been working on for the last couple of years is kind of trying to get closer to this ideal, especially with Avalanche and what we're doing with the Avalanche Card. So the Avalanche Card is live now. It's available in the US and several countries in Latin America. You're able to spend against assets like AVAX, USDC, USDT without any bank dependency. And it's accepted anywhere that Visa is accepted. So to the end merchant, it's just as if you were paying in fiat. And Rain is the platform that is enabling this. So we power dozens of card programs globally with our crypto-native infrastructure. So we've spent the last few years building from the ground up a crypto-native card issuing stack. So not trying to do something where crypto is in the top, but then all the way down, it's still fiat. Everything we're doing is as on-chain as we can be. And I'm going to walk through some of the primitives and the technology we've been building to make this possible. So the first thing is all our cards are credit cards, and they're all collateralized by your on-chain assets. So as soon as a Rain user passes our KYC and gets approved, we deploy a smart contract on-chain for them, and then they can post collateral on that contract. The collateral they post can be stable coins, it can be non-stable assets, and then we underwrite that. So we don't do any credit checking, we don't look at your credit score. It's all based on your on-chain assets. And then your wallet is the owner of that smart contract. So it's the only one that can withdraw from that smart contract. Then we create a credit limit for your account, and then you can spend against that credit line wherever Visa is accepted. And some benefits to this, so it's completely transparent. Your funds remain on chain. In the Avalanche Card case, there's an address. You can look it up on Snowtrace. You can see that your assets remain there. There's no commingling of your funds, so it's not mixed with other users' funds. Your funds are segregated into its own smart contract. And there's no rehypothecation, so you don't have to worry about us lending it to someone, staking it, earning yield in maybe a way that's very risky. The funds are just there for collateral for your spending. Then the second primitive that we moved on-chain is your credit card statements. So every time you spend, you're racking up an off-chain balance. And then daily, we aggregate all the spending for your cards as they settle in the Visa network. So typically, transactions settle after a few days with the merchant, and we aggregate all that spending, and we post that card balance as a statement to your smart contract. So benefits of this approach. So this can actually be done by a third party. It doesn't have to be done by Rain. And it can be done for things that are not just card payments. It can be done for SaaS subscriptions. It can be done for mortgage payments. So this decoupling of the platform and the publisher of the statement allows for a lot of flexibility. It also has privacy protection. So every time you swipe your card, we're not posting on-chain details about how much you spent or where you spent it at. It's all aggregated into one amount that signifies the total amount that's due. And then this collateral statement, you can either pay off manually or you can wait for us to automatically liquidate your collateral to pay off the statement. But this card statement on chain is a primitive that's really important for the next step, which is we've also brought in the credit card receivables on chain. So typically an issuer like Rain would have to work with a bank or a lender to raise a credit card facility or a credit line with them to finance all the spending, because there's a lag between when you make a payment, when you spend on your card, when we have to settle with Visa, and then when you pay us back. So to finance that lag, we have to raise capital from somewhere. By publishing the statements on-chain, we're actually able to borrow against that on-chain as well. So we work with on-chain credit facilities and credit partners like Huma Finance and Credit Coop to actually borrow on-chain. So on Credit Coop, there is Rain Credit Line, and all of our on-chain payment history as establishing our on-chain credit score. So then lenders can go on Credit Coop, look at competing credit rate or competing interest rates that we're getting. They can go and undercut other lenders if they want. So because we're doing this credit card receivables on-chain, we're unlocking some other advantages. So one, repayment is fully programmatic. As our customers are repaying their card statements, that actually is going into a smart contract that automatically repays the loans that we're getting from our lenders. And then we can go and pull in another loan and complete the cycle again. And because we're doing it this way, our cost of capital is a lot lower than a typical credit card issuer, because we can borrow as much as we need when we need it for a smaller amount of time, which means there's lower fees, lower risk, and more flexibility for us to do this. And then we're also increasing access to this new asset class of credit card receivables. Typically, you have to be in private credit, you have to be a high net worth individual, or you have to be a bank to get access to this. By creating pools that will eventually be more permissionless, other people can get access to these yields, which can be very attractive, 10, 15, 20% yield in this, and it's very low risk compared to other ways that people are earning yield on chain. And then the last piece I want to highlight is actually, everything is built up to this one last piece, which is actually settling with the network itself on chain. So typically an issuer like Rain would have to post collateral with the network, because we can't settle with the network during weekends or bank holidays or overnight. So to handle that settlement risk, networks require issuers to have multiple days of spending posted as collateral. But we have this pilot with Visa where we're settling 7 days a week, 365 days a year, completely on-chain in USDC. So as we borrow on-chain, we're actually able to take that capital that we borrowed from our lenders, settle with Visa, and then we get repaid back by our users, and we're able to cycle that back. So a lot of improvements and benefits that come from this. So because settlement can happen every day of the week, on weekends, overnight, this reduces our liquidity needs, so we have to borrow less money at lower cost. And then two, there's a bunch of operational efficiency, especially for a crypto card. Typically, you have to figure out how you're going to off-ramp all the crypto that you just got from your users. We don't have that need because nothing we've done involves off-ramping. Nothing we've done is off-chain so far. We can settle directly with Visa on-chain. We just have to go and merge swap all the tokens that we have into USDC and settle directly with the network. And all of this can be automated with smart contracts, no need for manual processes or human intervention. And the last thing is this reduces the cost of being a traditional card issuer. So we don't have to have as much capital constraints. We've cut down a lot of intermediaries. So as a principal member of the Visa network, Rain is actually issuing the cards directly. And we're able to do that because we don't have bank dependencies. we're the ones who are underwriting the credit with our lenders. We're settling directly with our customers. We're settling directly with the network. And because of that, transactions, fees are lower, and then eventually that can be trickled down to the end user and the end cardholder. So yeah, that's a quick look at some of the work that we've done at Rain to power the Avalanche card. If you're interested in launching your own card program with Rain, you can reach out to us at rain.xyz. We also have a booth in the adoption studio if you want, and we'll be having these limited edition Avalanche cards. They're light up, so as soon as you pay at a terminal, it lights this little Avalanche logo lights up, so it's pretty cool. So only available here at the conference. I think we have a little bit of time for questions if anyone has. Well, there's no fees. So by default, you don't have any, there's no spread. There's no transaction fees because our underlying costs are pretty low, right? On a low fee chain like Avalanche, moving assets is fractions of a penny, and we can eat that cost because our revenue model is on interchange. So interchange is the networks charge merchants a fee for accepting their cards on the network. That can range anywhere from, in Europe, it's pretty low, like 10, 20 basis points, all the way up to 3% of a transaction. And then a lot of that fee goes to the issuer like us. So we're able to monetize on the merchant side. And then we can eat, like fractions of a penny it costs to actually move funds on chain. It's pretty small. So users don't have to pay anything for using a Rain-powered card. Yeah, so it's very similar to any other card. Like, there's a dispute process. You can put up evidence that you were attacked, and then we'll work with Visa to get you that money back, and then we'll push funds back into your smart contract, and you can withdraw it if you want from there. We've been exploring ways to decentralize that even more. So we were talking to Claros, which is like a decentralized arbitration system that is basically a decentralized court. So then you can actually make a case against a merchant in a decentralized court, provide your evidence, and then the judges are incentivized to agree on the same decision. So that might be in like a future version of Rain, a decentralized dispute system. But right now, we just rely on the existing like regular Visa rails for disputes. Yeah. Yeah, so we pretty much lend against any dollar-backed stablecoin as long as we feel like the issuer of the stable is actually doing the proper things in terms of backing it with cash-like equivalents. With Avalanche, the first experience of doing non-stable assets, so AVAX was the first non-stable asset that we supported. And then we're working with Avalanche to figure out what the community wants to spend against. And as long as the asset is liquid enough and there's a deep enough liquidity pools, we'd be willing to lend against it. So we've been talking about staked AVAX as like an obvious next one, wrapped Bitcoin on Avalanche as another one. There's some meme coins that we're figuring out if we want to support or not, but we're really looking at the community to decide what they want to spend against. Awesome. Thank you, guys.